Hi, this is Jay Norris, author of Mastering the Currency Market, also a host of Live Market Exercise at Clovernest.com. Welcome to the report. Before we get to the charts, I need to point out that trading futures and Forex is a risky endeavor and not suitable for all investors. The charts we're looking at are real-time market snapshots and may not be replicated going forward. Pretty exciting day today. Well, there's a lot going on. Well, here's your Australian dollar. We weren't so much focused on this, but you can see, hey, that's a red candle today. So you had some more downside. No surprise there. The daily chart had shifted earlier. You know, we were talking about that market trying to hold above par and the importance of that, holding it above 100, and it couldn't. It couldn't hold above 100. So, you know, you got to think, hey, that opens up the downside. I imagine your next test would be the weekly directional line there, 98 and change or so. That's pretty close there. You know, as we said, if you love this market above par, you're going to love it at 95. I think that's where you could get a shot at picking it up. 95 on the downside. So short-term trend down on the daily. Weekly still higher, so your counter trend. So you know, look for choppy trade overall with a downside bias. Next market, the euro US dollar. And it was an exciting day, and we'll get to that. Not necessarily in these majors, though. We'll have to see what they did. There you go. Well, a lot of inactivity inside candle. In the inside candle, you open right where you closed. Not much of a change. Did you make a higher high? No, not quite. You matched the high, it looks like. So, you know, your bias is tilted to the downside. That purple line there, that's a 50% retracement. So, to me, I think you're going for the 50% retracement. You know, as bearish as this chart looks, this is a lower high. It's rolling lower. You know, your weekly's still up, so it's tough to pick up a head of steam with that weekly down. So you're in a bit of a counter trend environment here. Next market we're going to go to is the pound US dollar. And here's where it really gets exciting. You know, we talked about how the market loves the Bank of England's pragmatic approach. They love what they had to say in their inflation letter today for sure. This is an interesting scenario. This is what really gets me excited. This is what's fun about the markets. You know, I think the world is a smaller place, and I don't think it's everything against the dollar anymore. You can have days where the Aussie's down good, the Euro's down, well, the Euro's unchanged, and then look at the pound is up a lot on the day. So you actually have a buy signal here on the pound. The daily shifted higher in line with the weekly, and what's exciting about that is look at how close you are to that monthly. And then you can see there's a big trend line up there too. So people, this is big. You know, you get a little bit farther and, you know, potential breakout on the upside. That's really fun stuff. That's good stuff. And as traders, you know, I think you're always in the right place at the right time, as long as you're breathing, right? But, I mean, more so now with these big moves, and we'll get to those, the dollar yen too. But very, very interesting. You know, very shallow retracement here. Now it's back on the upside, it looks like. So that's pretty exciting. From my perspective, and the market likes the Bank of England. Next market, we'll check out the dollar Swiss. The dollar Swissy lost some steam here. We talked about this when the monthly and the weekly are counter to each other. These markets kind of become a slave to that 4-hour trend. The Swissy had a nice uptrend going. The daily was up, the weekly was up. They're all in line. However, you're as good as it looks. You're still in a counter trend market. You got up to the Jan high. You didn't even get to the Jan high, and that guy started swinging down. So you actually had a shift on the daily, and that's what you expect. You know, as much room as it had on the upside, you still had to be mindful that monthly was down. So it's susceptible to a 4-hour shift. Now, you know, here's what I'm pointing at. When that 4-hour rolled over in here, that was a warning sign. You know, it never quite did roll over here. It did here, but it came right back and gave a buy signal. Now it just rolled over slow. So, you know, sure, it could shift back higher. There's no doubt about it. But when that 4-hour shifted, it was a big tell, so to speak. for traders to lock in some profits, and that's what they did. So the Chief, not nearly as interesting. We were working at Chief all last week in our live market exercise. Today we didn't even look at it. We do the exercise Tuesday through Thursday. We were focused on dollar yen and our new friend pound yen the dragon. We were focusing on that today, and it was a very interesting day for it. Here's my good friend the yen, dollar yen. As a trader, you want to do this. This is what we do. We focus on markets that are aligned, that are higher on all those important higher time frames, and we just stick with them. Old saying I learned on the floor of the Board of Trade: find what you like and let it kill you. Stick with something that's working. Stick with something that's good, that tastes good. So here you go. What's really exciting is that monthly line looms, doesn't it? Here you pull out to a weekly chart, and we can see, this is essentially a box, a bit of a line formation, as we call it in the Dow theory. You're in a line formation. You break above that line formation, people, and that could be a biggie. Look at how cheap it is all the way down there. So a lot of things going on. U.S. economic numbers, not so bad. You win some, you lose. You lose one, you win two. I mean, the U.S. economy is definitely putting up better numbers than everybody else, and I think that has a lot to do with the weak dollar, the stealth weak dollar policy that's in place for so long, and it's really helped out U.S. multinationals. So I guess what I'm getting at is it does put the U.S. and their currency, the greenback, in a position to reverse this long-term trend, and that's going to be very exciting. Here's the pound yen too. We were focusing on this this morning. My clients and I all get together in a go-to meeting environment, and we point out what's going on in the live markets, and we do that for 3 hours a day generally, and we'll see what there is to see on those lower time frame charts. But we always base our decisions on what setup to focus on the higher time frame charts. So we are all over this guy. Look at that. Now it's all lined up, monthly, weekly, daily, all go in the same direction. However, we really want to see this market close above that monthly line. We can't shift that line until it closes, until month end. So technically it's above it now, but come month end it may not be. So this is exciting. I might feel comfortable if you did have a correction and put in a lower high. You did have a lower low here, but technically you have a higher high to this. Higher high, you go back 1, 2, 3, that's a 5.5 month high. So I guess that'll do it. I guess we don't need that lower high now because you got a higher high. So, boy, the pound yen is definitely exciting. As if you can't tell, I'm not amped about that. Let's look at the U.S. stock market. And then the dollar index, and then we'll wrap it up. Look at the stock market. Look at her go. I mean, brother, that is something else. I mean, that's just been a wild ride. Didn't we mark the 07 low? I thought that was the area that was key for us. Now that's the monthly line right there. The 07 low. Let me mark that because I think that's your next stop. That would be your next resistance. We would look for the old support to become resistance. And there's that 07 low. Yeah, I think you get there. I mean, a body in motion tends to stay in motion, and despite what everyone in blogdom has to say about how, essentially you just transfer private sector debt to the public sector and nothing really has been solved. Regardless of that, people are making money on the upside. And, to me, that's potentially your next target. And, the U.S. is cooking. Those economic numbers aren't half bad. Retail sales was not as high as expected, but some of the other measurements came in a little bit better. Here's your dollar index. Here's what we could focus on. Going back to 08, you had higher lows. Higher low 09, higher low 2010, higher low 2011. So, here's one where potentially you've got a big shift in place already. I go down to the daily, and you can see you're above all my directional lines, aren't you? Monthly, you're above the monthly, you're above the weekly, above the daily. So Brother, that could be a pretty good one. Hey, thank you very much. Again, my name is Jay Norris. Come and check us out at clovernest.com. Check out our live market exercise. That is complimentary for clients of the firm. We have a lot of fun in there, and it's all about trying to stay on the right side of that market. Keep in mind, Forex trading involves substantial risk of loss and is not suitable for everybody. Thank you very much, and we'll be back tomorrow.